In this video, you will learn our thoughts on how China has asked DIDI to delist itself from the U.S. stock exchange. We'll show you the financials behind this company and what we think about its future going forward. We'll discuss the potential risk this may have in investing in other Chinese companies like Alibaba. Mo will show you the trends and charts about trading the stock at a quicker pace if you're interested. But first, why should you watch this video? I bring your questions about DIDI, the Chinese market, and other Chinese stocks to a couple guys who own and operate over $100 million in real estate, multiple businesses, and stocks, and they'll show us their mindset in possibly investing or avoiding companies like this. Paul, what do you think has happened here, and where can it go?
Thank you very much. Please follow us on Instagram, Everything Money Investing, and then also follow our 3 personal accounts. I do not do anything having to do with stocks on it, but I like to just show my personal life.
And pump your ego.
And, well, of course, pump my ego.
You need to get that blue check, baby.
I know. I applied for it, and they rejected me.
Oh, sad. Don't they know who you are? Boom, boom, boom.
All right, so here's our exclusive Everything Money software. We're going to go to the 8 Pillars tool here on the right. Type in DIDI. So DIDI is the Uber of China.
Yeah, I mean, they offer more things than that, but yes, mobile transportation, yeah, something like that, for sure.
So they were, so this is a very new company. $16 back in July. Now they're $7. Oh my Lord, there's like no information.
Yeah, there's like nothing.
You might be asking, wait a minute, I'm watching a video of 3 guys who don't know what DIDI is. That's absolutely correct. If you're pitched a deal in this world, do you want to buy said company down the street? You might not know anything about it at all, but we want to look and see, do they make any money? What kind of growth do they have? And we'll get into it from there. So Paul, tell us the steps about investing in a company like this and your hesitations perhaps at how this might turn into other Chinese companies.
So from my standpoint, if somebody's coming to me and saying, Paul, buy DIDI stock, the way I like to do investing, doesn't mean it's right for you, but the way I like to do it is, I like big companies with track record. If a kid comes out of high school, sophomore year becomes a baseball player, has a great year, do you give him a $30 million a year contract?
Of course not.
Of course not. Why? There's no track record. But if somebody's 27, been in the leagues for 3 or 4 years, has great numbers, you give them a $30 million a year contract. Much more likely. Why? They have a track record. You've seen them through. You see how they're playing. Same thing with a company. I like to find companies that have a track record that I can sit there. It's too hard to determine the future. However, if I see how they've operated in the past, I can see how the future might look. If we can get a reasonable assessment of what's going to happen in the future, that's how we can value a stock, because every investment's the present value of all future cash flow. I see nothing here. This is their income statement. Quarterly income statement. It has, I don't even get this. 8 pillars, no data. Cash flow statement. I mean, we don't even have the full, they don't even report. I believe foreign companies don't even report on a quarterly basis. So I look at this saying, okay, the company's a $30 billion company. Oh, they made money last year, $238 million.
Yeah, for sure.
Okay, guys, I hate to be boring. First off, if you're looking at this, but then scared of Alibaba because of the VIE structure, this isn't the VIE structure, right?
Tell me more.
VIE is a structure that Chinese companies have to own, shares have to be held in order for them to be listed in the US. Okay, this is pretty much all Chinese companies, all the big ones especially. There's risk that this could go away. China could make this illegal and stop these quote unquote loopholes for it. Is that a possibility? Absolutely, everything's a possibility. But at the end of the day, I sit there and look at it going, is China really going to if China did that to a company, what would that say to the US? What would that say to investors in the US? They would never ever buy Chinese companies again. Does China really want to shoot them? As much as China might want to keep things in China, they still want access to our capital. Everyone wants access to our capital. Is it a risk? Absolutely. Is it as big as people say? Ironically, I only hear about it when people talk about Alibaba. Why? Because Alibaba's at 126 right now versus 320 it was a year and a half ago. That's when I hear it. I don't hear about JD. I don't hear about any of these other Baidu. Neo. I don't hear about any of those. Those are still risks in those companies. But the prevalent conversation about Alibaba is this VIE structure and getting delisted. Is it a possibility? Absolutely, it's a possibility. I have my big position in Alibaba, but I still hit my max for my portfolio. I'm good. I'm down 33%. Not worried. I shouldn't say I'm not worried. I'm keeping track of it, but I'm not going to sit here and make a decision based off of To me, Charlie Munger felt comfortable with Alibaba and increased his percentage ownership by 80% in his fund last quarter. That was enough for me to say, if he trusted, I trusted. I have no idea what his valuation is. I know what mine is. DIDI, I don't care what anybody's valuation is. The great news is, ironically, I look at Munger and Buffett to verify my picks, not to go make my own picks. Does that make sense?
Yes, of course.
So I'm looking at going, okay, Munger likes Baba. I like Baba. He's comfortable with China. Therefore, I will be comfortable with China. But there are companies that Buffett, they own Verizon. I can't for the life of me understand why they own Verizon.
Nope.
I don't own Verizon because I'm just like, I don't get it. I don't get why they own Verizon. I get why I own Baba. When I knew Munger owned Baba before I even bought Baba and before I was even comfortable buying Baba. If I look at these things saying, okay, this is all part of it. With DIDI, man, I just don't get this. I mean, yeah, they made money last year. Well, now it's saying here, I mean, this is just confusing. Annual on annual. Ugh. Guys, I'm just avoiding DIDI. If you want to make money on DIDI, trade it. With Mo and our software is here built. Let's look at a company like Uber, the US ride hailing app. 8 pillars. You can go. Oh, we don't even have the data for Uber. What am I talking about?
It's too disruptive, Uber is, but.
So let's pick another company. Give me another company, Seth.
It's like this?
Well, not like this. What about Baidu? What about Baba? Let's look at Baba. Mm-hmm. Look at we have the pillars for Baba. We have we have financial statements going back years and years and years. I can look at this data and say, okay, there's growth here. There's really significant growth here. Great.
In essence, we need this data to project out what we think can happen in the future instead of just guessing. So if you're at home and some YouTuber has instructed you to buy DIDI because it's in China and it's incredible and it's growing and you never knew why you bought it or where it's going to go, this is the process we go through. And so we like seeing these financials to make a prediction moving forward, Paul.
Yeah, and again, every investment's the present value of all future cash flows. So we want to make assessments. We want to make assumptions on that future cash flow. And the way I do that is by seeing a track record. How has this company done in the past? And then go over the future for it.
Are you envisioning a day where we're going to get the news that Alibaba may be delisted one day? What would happen then?
It would be bad. It would be very, very bad. I don't think it'd be bad just for Alibaba. It'd be bad for all China. Alibaba is the biggest Chinese company.
Question for you.
Wait a second. If Alibaba is the biggest Chinese company and they were delisted, goodbye to all other Chinese companies.
Right. Would delisting be, aside from the optics of it, it's going to be in their market and it's still going to be a good business. It just won't be in the New York Stock Exchange. Does that change the business that you're still making money on the business?
Well, I don't know what that means for our shares then.
Yeah, Tencent's actually the biggest.
Oh, what are they at?
They're at $550 billion.
Oh, okay. Alibaba's third biggest.
Yeah, third biggest.
What the heck's that second one?
Kwai Chow Mount Tai. Duh, Paul.
Oh, I know them.
This? Yeah. It's the 20th most valuable company by market cap.
PlayStation from them.
Did you, Mo? I don't know what they do. Yeah, I mean, it's funny, Paul. We've done 1,100 videos, and most of them instruct folks, hey, by the way, patiently wait for a great time to buy. And when that happened with Baba, we've been talking about it ever since. It's one of our most popular topics. But we don't make massive price predictions that often, but we have been adamant that we think Alibaba will be much higher in the future. But I'm wondering if the joke will be on us one day, Paul, as if it gets delisted. It might be, right?
It might be. Guys, remember one thing. A great investor is right 50% of the time. This is a risk. But again, I look at the upside of that risk. If I had 100 of these situations, I will make that bet every single time.
Yeah.
Because 20 of them will probably end up happening and it would be bad, but a lot of them will do very well. The funny thing is, everybody's focused on Alibaba for me. I have 13 companies, and the only thing I hear about is, what about Baba? What about Baba? What about Baba? Because it's the most prevalent in the news, and it's here, and it's down a lot. Okay. The other day, one of my picks was up 8% and up 20% since I bought it just 3 months ago. I didn't hear anything about that. Mm-hmm. I'm okay with it. I'm not here for that. What I'm here is to teach a process. And that process says that we could be wrong on Alibaba. What happens if Alibaba is delisted, right? By the way, guys, you find an article on CNBC about it. If it's delisted, the price plummets. I believe it goes to over the counter, and then the company in China can buy your shares back at a big discount. I don't think it's going to go to zero, but it'll be a massive discount because in a VIE structure, you don't technically own any of the assets within the company. You get access to the cash flow from the company. That's what it's giving you access to. So do your research on that one. I've had people say, Paul, I don't get this VIE structure. I'm not buying it. Wonderful. Love it. Do I get the VIE structure? I understand what would happen. To me, I'm making the bet that it's being overly dramatized a little bit because the stock is down so much. Is that scientific? I don't know. But I look at it going, it's 2% of my portfolio. I'm okay if I lose 50% of it. It's 2% of my portfolio, which is like 1% of my net worth, if that. I look at it going, so am I willing to lose 0.5% of my net worth on this thing that could potentially be, where I perceive to be 5% of my net worth? Yes, to me, those odds are in my favor. Does that mean I'm gonna be right? Absolutely not. But these are the issues. How does this become a Baba video from DIDI?
Well, I mean, everyone knows that, like,
There's nothing to talk about with DIDI.
yeah, they're leading the way into this topic. I mean, scary for us Baba holders, I guess, especially like me. But
And by the way, if this is scary for you on Baba, please sell your shares. You can't handle it, and that's fine. Stay in your sphere of influence. Or you should have a lot less, or you should own a lot less of the company. If I own 20% of my portfolio in Baba, I'd be scared crapless right now. But I don't. I own 2%. Why? Because I sat there and said, okay, if I'm wrong and I lose 1%, I'm okay with that. But if I'm right, I think I make 8%. It goes from 2 to 10%. Okay, that's a good, to me, that's a good risk reward possibility. I'm okay with that.
I'm at 2% as well, so.
Yeah, so I'm like sitting there going like, okay, great. You shouldn't be putting a big chunk in your money. The biggest, somebody in our Discord today said, Paul, my biggest concern is trying to get myself not to buy more shares. I'm like, listen, I hit my max. I'm very strict with my rules. There'll be other situations I'll be able to buy in the future. I'm okay with that.
If looking at these numbers resonates with you, you can have this software right now. You can join our community. Paul will tell you about it. Go ahead.
All right, thanks, Seth. So guys, we created the software because our users kept requesting, how do we do our own research without waiting for you to make your own videos? So we spent lots of money, created the software. You get everything you already saw in the video. You get all of this content right here, which includes 30 years of financial data, access to Seth Mo and I. You get it all on your mobile phone. This entire website, everything you've seen on your mobile phone. You get the stock analyzer tool. You get real estate calculator, retirement calculator, all the extra additions. You get our 8-pillar portfolio, exclusive daily content, 2 or 3 videos a day from Seth Mo and I on separate topics. But most importantly, guys, you get access to over 6,000 people are current active users of our software. They're in a chat that's very organized with multiple rooms about different topics. You can talk to them about all your investment ideas, tell them your ideas. They give you feedback. You have actual discussions because most of the people are like you out there who didn't have others to talk to about investing. Now you do. This is wonderful. It's only 90 cents per day. Less than a cup of coffee, guys. 90 cents a day. If you can increase your returns by 1 or 2% a year, or decrease your losses by 1 or 2% a year, this will lead to hundreds of thousands, if not millions of dollars in extra wealth when you retire. 90 cents a day, guys. 2 ways to sign up. Everythingmoney.com or Patreon. The benefit of everythingmoney.com is you get no sales tax charged to you yet because we're not big enough. So sign up, you get access within minutes, 90 cents per day.
Mo, what are people doing over there in trading, DD, after this news? Did anyone catch this rundown?
Well, there's one way, in my opinion, to trade this, and it's from a day trading perspective. And this is a daily chart, so I'm going to show you here. This right here, this little blue line, that's the 100-day moving average. It just started a couple days ago. So this is the reason I like to have 1 year of data before I do something on a chart, because that tells me a whole story. I don't have that here. They just went public in, June, July? So we need to wait until next July to trade this. But you can come over here to a 15-minute chart, and I mean, today's perfect. You could have got in here at $7 and we'll call it 55 cents, and you could still be riding the short right now because you would follow it right under 20% and be running this down. You'd be at $7.26. Yesterday, when it had a little bit better day, you could have gone long on it. It was over 80%. Grab these engulfing candlesticks and move up. So this is a perfect company because, especially now, because you're getting this type of volatility based on news, this is when you come and trade companies like this from a day trading perspective and make money on them just in that 1 day period. And if you want to learn to day trade, come over to the Bid and Ask Nation and join me. You get access to the Trading 101 series, which will teach you all of the rules that you need to be a successful day trader. You get the Employed Trader series. If you're into long-term stocks, I have 6 stocks that we go through every single day, and I tell you what to do with them, and you follow me. You get my exclusive monthly seminars. One of them is going to be this weekend, and a Bid and Ask community on Discord of 900 plus people. It's the place to be.
That's our take on DIDI, the Chinese crackdown, and how it'll affect Baba. I would say, Paul, this is your, talking about a flagpole, this is like your rallying cry. Like, Baba has been just such an important stock for us this year to talk about.
Yeah, but the funny part is, it's not even. It is my biggest holding in my portfolios, but only because I only have 13 stocks, and I am 90%. I'm 85% cash still. So. Again, this is why I'm good at investing. I'm not allowing myself to be emotional about it because I didn't put enough in there that allows me to be emotional, right? Even my S&P short, which is 10 times larger loss right now than my Alibaba, I don't lose sleep at all about it.
You're still confident in your decision making.
But again, because I also have 8 businesses upstairs, 8 or 9 businesses. I have real estate. I have so much going on. I never ever put all my eggs in one basket. Diversification allows me to, instead of being a 5-foot investor, I can be a 100-foot investor and still make a lot of money, when most people are a 10,000-foot investor. So understand where you are in that process. Be honest with yourself. You should probably be 80, 90% ETFs and pick 20 stocks with your other 10 or 20% and own those at 0.5% or 1% of your portfolio each. That's it. You'll still have a great time. You'll stay active. It'll make you a lot of money and have fun with it. But don't go do anything that makes you go, what the heck's going on? Because every single day you see that number go down, I guarantee this is also driven a lot by people like you out there going, oh my God, and sell. It could very well be the case. Guys, delisting doesn't mean the world's coming to an end. Luckin Coffee delisted it, went down to $1 a share, and then ended up a year later, after the delisting, going at $7 a share. It's not the end of the world. It makes things harder, but it's not the end of the world.
And theirs was fraud.
And guess what? If they announced this is being delisted today, cut that by 60% probably. That'd probably drop to $50, if not lower. And you have to decide yourself, what are you going to do? But if you can't handle that risk on the portfolio size, you should you should never have bought in the first place. Never risk more than you can afford to lose on any investment. You're not Warren Buffett. Warren Buffett's okay owning 6 to 10 companies. I am not Warren Buffett. I'm not okay owning 6 to 10 companies. I want 20 to 40 companies that match my criteria, and Bob is one of them. If I could have 100 of them, I would. But I can't.
Mic drop. That's okay.
Yeah.
That's our take. Fondle thumbs up. Join the community. You'll love it. And we'll see you next video. Thanks for watching.